Rampraveen Swaminathan joining us now, MD and CEO for Mahindra Logistics. We're talking about their Q4 numbers. A bit of a rough quarter, I would say. Revenues were up 14%, but EBITDA down 11% at 56.6 crores versus an estimate of 60 crores. Margins also squeezed to 3.9% versus 5%, and a net loss of about 11.9 crores. I'm speaking now with the MD and CEO, Mr. Rampraveen Swaminathan. Welcome. Thank you for speaking with us here at NDTV Profit. Can we get a sense of where the pain points have been? I'm seeing one-time sort of a provision for 10 crore rupees as a doubtful receivables. Can you share any more details on that? And is that what has sort of skewed the picture? I think you're on mute, sir. Can you say something? I think you're on mute. All right. I think we need to try and get that audio sorted before we come to Mr. Swaminathan on what has been happening with that company. But, this definitely seems one very clear reason why you've seen a sort of a, hit on the profits, because there was a one-time provision for doubtful receivables of about 10 crore rupees. There were IT charges of 2 crore rupees as well. So at net, you have a net loss of 11.9 crore rupees versus a net profit of 0.2 CR last time round. So not that there was too much of a buffer, but this could be one of the reasons you're saying. If you take that out of the picture also, not real growth being seen there at any point. What else has been happening for the company? Well, their guidance say they aim to become a 10,000 crore rupees logistics service provider by FY26. They're on track to EBITDA break even as well. I think we have Mr. Rampraveen back. Sir, can you hear me?
Yes, I can. Good morning.
Good morning. All right, there you are. Let's start with the numbers and what's happened with the profits. Do you put this down to those one-time provisions, and can you give us more details about it?
Sure. I think, it's actually a fairly robust quarter from a revenue perspective. After a kind of mute first half, we have got back to double-digit growth. Revenues grew by around 11% year-on-year during the quarter and grew sequentially as well. From an earnings perspective, our business is in two parts. There's a core business, which really is our 3PL and the global cargo business. And that business was pretty flat in terms of earnings. It was impacted by one-time charges, which I think you spoke about. Those charges were on account of several discontinued accounts. We exited some accounts in the commodity space some time ago, and we essentially reviewed those and took a charge towards those. We also went through a significant IT transition this year, and we had an incremental cost in this quarter for those. So both of those are non-recurring charges, and set off for that, profits in the core business is actually up 4% if you adjust for that. The second part of our earnings story really has been the express business acquisition we did some time ago, and that's an investment we are making from a long-term perspective, and we're scaling that network up, and that business actually had a really strong quarter in terms of earnings. Our losses in the business actually came down by around 34% on a quarter-on-quarter basis, and so that's been a really and we believe well set to achieve EBITDA breakeven in that business by the end of the first half of this financial year. So while I think peeling the numbers, actually we felt it was a fairly good quarter in terms of underlying earnings, and we have some pretty strong tailwinds going into the rest of this year.
So Swaminathan, I'm just going to take a follow-up question at Tamanna's, and you indicated that after a very quiet last 9 months, fourth quarter has seen a little bit of an uptick in terms of top line. I believe you've set yourself a target of 10,000 crores by FY26. You want to tell us the glide path for it? Because even at a 14-15% growth, that number seems a little out of reach, at least given the current situation.
I think there are really three parts to that story. So I think the first one is our core third-party contract logistics business. We do expect that to grow in the mid-teens. As I said, it was important for that growth to come back. You must be mindful that we have three smaller businesses: our global cargo business, the B2B express business, and the last mile delivery business. These were inorganic acquisition-led businesses we have entered over the last few years, and those businesses are all in a growth phase, and therefore we expect those businesses to grow at higher than teen level over the next 3-4 years. And then of course there's a mobility business which actually still is below pre-COVID levels, and we expect that to recover right over the next 3-4 years. So in our math, the 10,000 crores is still pretty much in line of sight. We expect to be able to scale the business, especially on the back of the newer businesses and the mobility recovery quite strongly. We might look at more quarter here and there, but I think we still believe we are in line of sight for that.
Mr. Swaminathan, one quick question on margins, and those have been seeing again decline quarter on quarter, year on year, close to 4% now. Is there any sort of upside risk to margins in FY25?
As I said, so I think there are two parts to it. I think on a consolidated level, we have the core business, which has been there for some time. That's where we are historically being strong. And those businesses, sequentially, were actually flat on margin if you take out the one-time expenses, which were there. And those are non-recurring charges, which will not be there going forward. We're absolutely confident about that. I think the express business has been the large carry, and that we look at it independently as a significant long-term investment for growth, and both on a standalone basis and synergy it provides to the rest of our company. And that business, has been the larger impact in terms of our earnings over the last few quarters. Now that business is now in a clear uptick. The losses declined by 10% in Q3. They've declined by nearly to 30% in Q4 at an EBITDA level. So we feel pretty good that over the next 2 quarters, as that turns to EBITDA breakeven, you'll see a fairly big flip at a consolidated margin level.
So, just one last question, Mr. Swaminathan, and a little forward-looking. What are the sort of segments that you expect to fire going forward, Q1 and beyond? For example, your last mile delivery did fairly well this time, not so much freight forwarding, etc. What are those segments that you think will, boost you up to your guidance?
I think from a segment level, clearly our business segment level, contract logistics and last mile delivery, I think, are doing really well from a growth perspective. I think the forwarding business has difficult, challenging global macros. So we are, growth is, we hope growth will come back, but there are some challenges there. I think in terms of end segments, for us, automotive and FMCG have been strong over the last couple of quarters. We've had good order intake. We expect that e-com now has bottomed out, and we are seeing an uptick there as well. A strong quarter in e-com in terms of recovery, and I hope we'll sustain that in terms of more penetration.
What is the revenue size you expect e-com to increase to?
No, I think we don't give guidance, but we do expect our overall third-party logistics business to grow at that mid-teen level. That's kind of what we've always aspired to do. Last year was a bit of a challenge, but we expect to be back on track this year.
All right, thank you. Thank you for that, Mr. Swaminathan. That was the MD and CEO of Mahindra Logistics talking about the quarter gone by and putting down those losses and the margin squeeze, the profit losses actually to one-time provisions. With that, it's a wrap on India Market Open, but stay tuned.